CPI came out worse than expected. We're going to dig into it. I think what's fascinating is just how we formed this doji on the S&P. If we look at the initial reaction, we can see the run up and then the consequent retesting of support levels. But what's really interesting is right off the rip, right off that announcement, straight down and then a rally. We're going to get into what stocks are moving, what's going to move tomorrow, what to expect going forward. Let's get into the numbers here. Subscribe to the channel. What we go over here is extremely timely with updates and alerts. We did a live stream today. If you want to be notified of those, make sure you click all notifications. We did the release real time, so you actually get to see how the data moves the market. Core CPI, 0.4, right in line. 5.6 core CPI year over year versus 5.5. I use a site called investing.com when you're looking at this. It's a free site. Anybody can utilize this site. Core CPI refers to no food or energy in there. Month over month was 0.5. That actually was raised from 0.4 before the release and then came in, quote, in line. So that was a little higher, but the real crux was this 6.4 versus 6.2%, significantly higher. Now, the one thing that nobody is pointing out, and it's very significant, see this 299.17, 298.66? What you're staring at is on investing.com, and anybody can go and look. You can see these numbers I'm about to show you. You can see how they come up, and now the 287, 289, 296, 298, 298, 97, 296, 299.17. You're at an all-time high. You're at an all-time high. This is from the AtlantaFed.org. Anybody can go there and pull this up. This is sticky price CPI. And these are prices that don't move that often. Think rents, think if you need medical surgery or medical supplies or medical attention, things like that. That is in orange, sticky CPI, 12-month. And look at this number and how it keeps going higher and higher. But look how the flexible CPI keeps coming down. Now you understand the issue. The issue is that inflation is going to be here longer than expected. And what happened today with that information? We came down, looked like we were going to break, forms a doji on the futures market, rallies, classic reversal, undercut. What do we get? Wicks or what? Price rejection. Then it looks like you're going to break the H. What do? You reverse on the H break, give yourself a piercing pattern. These are glaring. They are everywhere on the charts right now, these piercing patterns. When you come underneath right here and you flip and you're up over 50% on this bar. I'm actually going to do a video on this pattern. It's so significant. It's so easy to trade. Now, once you're over, that was it all day long. So in other words, the market doesn't care. Let me explain what I mean when I say it doesn't care. It's not that it doesn't care at all. It's the fact that it's obviously factored in at this point. And if anyone's saying that it's not factored in, they're just not understanding what's going on out there. So here you are in August, and this is Fed Fund futures out to September, and you can see the rally. And then we came across, and then we broke out today because inflation is going to be around longer than anticipated. And if it is, that means that rates, Fed funds rates, which these are Fed Fund futures out to September, might be higher than anticipated, right? Look at where we started on the 3rd, Friday the 3rd. You started at 480. Look where you're at now, over 5.25. The orange is the S&P. If we take this specific line and we drop down, we're up when Fed funds futures broke out. This is the dollar. This is the S&P. Take a look at this line right in here. Look how we rallied and look how we're coming back down. Look at the S&P during the same period in time. Look at today's move on how the dollar is dropping and how the S&P went higher. Now, at the same time, we formed a doji today. It couldn't be cleaner for us as investors to watch that doji. You have a line going straight across here, this resistance of that 41.05. Somewhat of interest, not really the line that I'm looking for. See that line right there? See that? That's called the DTL, downward trend line. Now, what you can do is you can clone these. You hit the little clone button, right? Every system has this. This is TradingView. And you drop them in. See that clone right there? See that channel? Okay, sitting on this? This is a cup. This is a handle. No matter how you look at it, that pattern is sitting there. This is the top of the cup. You undercut the cup and you're right there. It's a cup and handle, no matter how you want to look at it. Okay? We can look at some of the other indicators that are going on out there too. Left shoulder, neckline. So no matter how you want to look at this, this is a pattern that's setting up to break out. We might not like it. We might not understand it. But I have a saying, and it's very, very simple. Just trade what's in front of you. Don't overthink it. Just trade what's in front of you. It's very easy to do. You don't want to overthink this market. You want to trade exactly what is going on. We have to stop being macro traders now, okay? We have to start doing what it is that we want to do, which is trade US equities, or what I should say is what we do here is trade US equities. 69 net, this is on fire. Net ran right to our 69 resistance level. It gave us a perfect entry today. This 1 minute orb opening range breakout, we flipped it, waited for confirmation right here because these have been failing. And then we just got in the trade, trimmed out when it got up to this level, and then stayed in and traded around all day. The great thing about this market is nobody believes it. As long as nobody believes it, we have an edge. We have an edge in trading. I don't know when this is going to end. No one knows when this is going to end. But if you're looking at minor supports and major resistances and you're selling in between them, you can pull money out of the market. That's your job as a trader. That's what these videos are focused on. I provide information and education. NVIDIA had its highest close of the year. Look at that rally, straight up. Now, where did you wind up stopping? Right at resistance, 230. This is something we actually put in the newsletter. Link in description for the newsletter. And what's so fascinating about it is this is where we got in. And what we're doing is we're getting off of support lines. That's where we're getting our entries off. And we're scaling out into resistance lines. And we've been doing it and it's been working. Now, you do have earnings coming out on the 22nd. And that's going to be absolutely fascinating. I'm going to rehash this because I got asked to in the comments to go over these ideas and follow up. And I do appreciate your comments. And if you have ways that these videos could be better, or stocks you want me to go over, or indicators you're interested in, just include them in the comments. I answer everybody. It just takes me a little bit of time. See all the dojis that happened in here? See all the dojis that happened in here? This is exactly what we pointed out yesterday. These dojis are going to make a decision. Just like these dojis in here made a decision. That decision was to break out. Guess what the decision was here? To push and to close at a new 2023 high. These are not going down. They're not. You might think that they're going down. You may want them to go down so that you can buy them again, but they are still not going down. That's the fact. That's what's happening. The market is the market, and it's going to do whatever it's going to do. It's just the way that it is. And it's up to us to figure out how to pull money out of it. Tomorrow, we kept hearing about Airbnb and how bad things were. Stock's up $15 after hours. The time of filming this, it's up 12. It's up to 15 at one point. This is filmed before the conference call. Sure looks like a mover to me. Beat expectations, raise guidance. Does that happen during a recession? Make sure this one's on your list tomorrow. Warren Buffett took a kind of an odd spot to take an investment in a lender if you think that lender is going to come out and have problems with people not missing payments because you're in a recession. Something to think about. GFS breaking out of a year base on earnings. Now, what's so fascinating about this is GFS makes more of the legacy chips. They're a foundry, but they make more of the legacy chips. And why that's important is all the industrials that you would use, or all the very simple chips that you would use, not the NVIDIA chips, not the 3 nanometers or the 5 nanometers, but you're just workhorse kind of chips. That's GFS. Met guidance, raised expectations, breaking out of a year base. Not something you see during a recession. Monday.com, the software company, just take a look at this. Surprise, huge beat, supposed to lose money, made money, reported a huge rise in revenue by 6%, stocks breaking out on it. We're seeing this more and more. Not going to happen all the time. But when you're seeing this, and then we're saying at the same time that inflation's out of control and inflation's running higher, I just want to reiterate, this is Fed futures breaking out. No one cares. Have a good evening, everyone.